And today's tip is actually, it's titled, It Can Always Get Worse. It can always get worse. And this is where really the motivational part of the presentation starts. So I'm so excited to have you guys all here. So that was a joke. So thank you guys for exciting me about what will be my third career, which will be in comedy. I'll have to personally not invite a single one of you to be in the audience because you're not getting my jokes, but that's okay. So this came out of a Wall Street Journal article this past weekend, and I hate putting up eye charts. I'm going to put it up just for a few moments, and then I'm going to break it down for you. But when I saw this, I thought it was a really good kind of presentation about what's a good graphical presentation about what's been going on for the last 6 months or so. So I wanted to share this with you. So this is It Can Always Get Worse, and I'll kind of go through what this is. So it's all of the different asset classes and all of their changes in value year to date. And I'm going to break it down in the next slide for you. But you can see some of them on the left-hand side of the chart have seen significant reductions in value, and some of them on the right-hand side of the chart have seen significant increases in value. So let's look at what those are. Bitcoin down almost 60% year over year. I think that's Bitcoin calling right now. So Bitcoin down almost 60%, the NASDAQ down almost 30%, tech stocks down 27.2%, S&P 500 down 20.6%, corporate bonds 17%, the Dow Jones 15%, 7 to 10 year treasuries 11%, healthcare stocks 9%, 1 to 3 year treasuries down 3.2%, and gold, supposed to be the thing that's supposed to save you when you know everything else hits the fan, is also down 1.3%. How many of you guys have seen your Bitcoin Coinbase wallet drop? How many of you guys have seen how many of you guys are like, I'm not even going to look at my 401k? That's okay. Don't keep looking away. Keep looking away. I think at this point it can't be helped. So let's look at on the other side the things that have gone up. So what has gone up over the course of the last 6 months? Coffee. I know personally this was one of the things. I saw this on the graph. I was a little shocked that it was on here. But this is one of the things, like some people hoarded toilet paper. I hoarded coffee. In March of 2020. I think those two things go together. Okay, so now you can be part of my audience when I go into comedy. But coffee was up 3.3%. The dollar 8.7%. The commodity index, right? So this is an indicator of inflation, right? Up 18%. Energy stocks up 29.2%, and then of course all of those around energy stocks. Crude oil up 40.6%, natural gas 45.4%, and gasoline 63.8%. It feels like savings are going in the wrong way, and things that are the expenses for us are going also in the wrong way. Is that what it feels like? I have this black arrow here. It should probably be like a down arrow here, right? In terms of what that looks, how that affects us, what it cost us. What did you guys notice is not on this list? Real estate. Yes. Yes. In fact, I looked at this twice. I looked at that graph. I looked at the picture twice. I'm like, why isn't real estate on here? Why aren't they talking about real estate? Why is that? What didn't it say? Because I think that's the only good news that we have right now. Think about it. Think about it. What's the only safe haven that we have right now? I think it's real estate. I'm a little biased, I'll admit, right? But if you look at all, how many people's stock portfolios have gone down, many people's Bitcoin wallets, and how many trillions of dollars worth of wealth that we've lost just over the last 6 months, and then you look at what real estate has done over the course of the last 6 months, even in an environment where people are saying, the Fed is increasing interest rates, right? We're still up year over year in most of the markets in terms of total sales, and many of the markets throughout Texas. Okay, prices still up, right? The value of your house still up. If you took out a home equity line of credit right now, guess what? It did not go down like your stock market portfolio went down, right? So this is the good news that I have to share with you guys today. So in fact, the year to date, so basically what that means is through June, right? Through June, 2022 through June and versus 2021 through June, Texas average prices are up 16.4%. That's a big deal, right? Austin up 18.2%, Houston up 14%, Dallas up 18%, San Antonio up 17%. The sky is falling is what it feels like when you're listening to the news, is it not? And when you look at your stock market portfolio or Bitcoin wallet, it feels like that too. When you look at your expenses, it also feels like that. But when you look at what's happening in the real estate market, it still feels pretty dang good. Now, are we going to be impacted by an increase in interest rates? Undoubtedly, right? But are we going to see a drop that's 30% in terms of our average price? There's no way. Why is that? Why is that? This is the interactive part. It's limited? In what? Give a little more. There's only so much land. There's only so much supply of houses, right? And what's one of the first things that builders have done since interest rates have gone up? They're slowing down. Do we need the builders to be slowing down right now? No. No, we don't. In fact, at least here in Texas, if the builders could build, I don't know, maybe twice as much inventory as what they built last year, that could do us a real solid, right? And I mean, yeah, I'm conflicted about this. Part of me loves the fact that we have no inventory because it means high prices. Part of me feels bad about the fact that we have no inventory because it means in some cases some folks can't not afford houses anymore. As I going back in the time machine, and I always say, like, punch me in the face if I ever say I remember when. But all of us say that, like, I remember when houses over there used to sell for $100,000 and now they're going for $1 million in some cases, right? This real estate, is probably one of the only safe havens out there right now. Think about that. Even in an increasing interest rate marketplace, real estate is one of the only safe havens, not just partially because there is no supply, partially because people are still moving here, right? Partially because people are still having babies, partially because what is our unemployment rate? It's in like the 3s, right? It's pretty dang good. In fact, the government calls full employment an unemployment rate that's between 5 and 6%, just because people are just naturally going in and out of jobs. Well, even if the Fed increases create a recession and start creating people being laid off, we're still going to be in a good market. So I think part of it is perspective, right? Part of it is perspective. What's the other reason why I'm going to tell you that housing prices are still going to do pretty well even through this recession? Jobs are still good, right? There are a couple, one of the big indicators of us going into a recession is what? The job market disappears. And you start to see unemployment at 5, 6, 7, 8, 9, 10%. Guys, 12, 14 years ago, we were looking at 10% unemployment, right? The Fed's going to have to raise the rates a lot to be able to get us there. And I just don't see that coming. And then what's the other thing that's probably going to guarantee that we're going to maintain our housing prices? We may not see the growth. We may not see these 16%, 18% numbers, right? But we're still going to see growth because we have no supply. And why else? What is someone's alternative? Rent. Rent's too high. So your alternative to buying is to rent. So when someone is looking at what's happening in the rental market, what are they saying? Holy cow, it's even worse than buying right now, right? So you do have to kind of weigh these things out, and they're all interconnected. And gosh, there was one quote in the journal, I want to say it was last Thursday, and it was from the Fed Chairman Powell, and the last line in the article said, we're just starting to realize how little we know about how all of these triggers and inflation and all of these things will affect the economy work. I'm sorry. You're the man in charge, and I'm sorry. Could you say? I mean, my jaw dropped out of my mouth. Think about that. So we could be in for a wild ride. But I think of all the things that are going to get hit, real estate's probably going to be the least one that will get hit the least, right? And that will be the sunny side up thing that's in your portfolio. So that's why I would ask you guys to kind of be open to that, given everywhere we are in the market right now. And I will also share with you this chart. And again, I know this is an eye chart. So, but this is interest rates versus median home prices going back to the 1970s. This is an interesting chart, even if you can't read it because it's such an eye chart. Interest rates are in blue. Housing prices are in red. When interest rates were sky high in the 1980s, what were housing prices doing? They were going up. Why? People need places to live. People were moving here. Economy was still growing. In 2009, this big gray, oh, you guys can't see the gray. Here we go, yeah, here. This is where we saw housing prices go down. Interest rates were also going down. A lot of people think, well, interest rates are going up, of course housing prices will go down. Has that been historically true? No. But what is historically true? When interest rates go up, typically we see a slowdown in the number of sales. Why? It's a psychological thing. I'm angry, so I'm just going to get angry and not do anything. That's a thing. I don't know what cognitive bias that is. Until what happens? Until someone says, honey, I think Powell's going to raise the interest rates again. And I think we're going to be able to afford even less. I think now is a good time to buy a house. Did anybody buy a house in the 1980s? I don't see anybody with enough gray hair or no hair in here. But there was like a race to like get the interest rate when it was 17 before it went up to 18. Think about that. Imagine the psychology that had to change there. So I will just leave you all with this, just to give you this concept of, yeah, the sky's not falling. The sky might be falling in your stock portfolio or your Bitcoin portfolio, and the price of coffee may be up and gasoline is certainly up. But your safe haven, right, it's probably not in cash, right, because it buys less coffee and gas and toilet paper, right? But it's probably in real estate, where at least you have a hedge. So sometimes there's this concept of the least worst option. And I never thought I'd say that about my friend who I love, real estate. But it is really the best option, even when the world has been falling apart or feeling like it's starting to fall apart lately. So that's one of the things I wanted to share with you guys. And I also want to make sure you all know how we can help you. And one of those things, and I hope you felt that from this discussion, is perspective, right? Perspective on what the market is going to look like. Perspective how you can win even when the market is a little bit upside down. And sharing that tribal knowledge with you to see you through all of these uncertain times. So a lot of times when the markets get uncertain, people start to do nothing. People start to do nothing because of fear. Right? So I will encourage you guys that if there is something to do, it would be in real estate, right? And